Welcome to Fun with Annuities, where every single week I welcome a celebrity guest expert that can help you maximize Chapter 2 of your life. Listen, learn, laugh, and love every minute of the most unique financial podcast on the planet. Let's get to it. Welcome to Fun with Annuities. I'm your host, Stan, the Annuity Man, America's annuity agent, licensed in all 50 states. We have a repeat guest, but he's been gone for a while. Actually, he's not. He's been very busy. But got an email from him the other day. He'd written an article on QLACs, Qualified Longevity Annuity Contracts, which we're running a close 1-2. Who's the biggest proponent of those? I guess Michael Finca would be third. But, we really believe in the product, and it's a pro-consumer product. Welcome back to Fun with Annuities, Steve Parrish.
Great to be here, Stan. Thank you much.
Steve, give everybody the brief elevator speech on who you are. I was going to do that myself, but it's better that the person that is the elevator speech does the elevator speech. So give the people a reminder of who you are.
Okay, well, I'm associated with the American College of Financial Services. And now my title is Professor of Practice and Scholar in Residence. And as you probably know, Stan, the fancier the title, the lower the pay. But what I do is I'm involved in the industry in a very broad way, trying to be a thought leader and provide ideas and suggestions in the retirement field.
There you go. And been in the financial services field for how long, Steve? Let's date you right here.
Oh boy, just a mere 48 years. It's not like a long time, like 50 years, 48 years.
2 more to go. And then what?
Yeah, then I'm going to just keep going.
There you go. There you go. So let's talk about QLACs. If people don't know what a QLAC is, that's unfortunate. And I would say the vast majority of financial advisors don't even know what a QLAC is. And the vast majority of financial journalists don't know what a QLAC is, which is also tragic. So let's go over it real quick. 2014, our friends at the Treasury Department and the IRS developed the QLAC. I was the first person to write a book on that. It's called the QLAC Owner's Manual. You can get it at my site, theannuityman.com, and you can run QLAC quotes to your heart's content, quoting all carriers for the highest contractual guarantees for your specific situation. But QLACs were really developed, and I want you to add to this, Steve. This is my Southern simplification of it. QLACs were put on the planet because the government never intended Social Security to be the primary source of income for retirees, even though it is for, I don't know what the percentages are. They wanted people to start planning for lifetime income, because what I call Chapter 2 of your life, I think the biggest thing that you need to establish is what I call the income floor, which is that monthly income amount hitting your bank account every single month, regardless of market conditions, global geopolitical stuff, political parties, etc. And QLACs, keyword qualified, can only be used in IRA type accounts. 401ks are starting to include them, IRAs, etc. So anybody that tells you never buy an annuity inside of an IRA, that kind of stupidity, you can just say, well, how about the qualified longevity annuity contract? Add to that definition and history, please, Steve.
Well, I think the basic concept that Congress knows and people that are my age are very cognizant of is we do not want to run out of money before we run out of oxygen. In other words, at the end of the day, we want some kind of lifetime income. And nowadays with a 401k or an IRA, I got a big pot of money, but you don't know how long it's going to last. So Congress came in and said, look, we got to come up with some kind of carrot to get people to buy lifetime incomes, or otherwise, again, they're going to be eating cat food and living in their car in their old age.
Yeah, and it's a demographic tidal wave of 13 to 15,000 people turning 65 every single day, which means they need lifetime income and they need guarantees and they need to transfer risk for what we call longevity risk, which is a very fancy way of saying what you just said, outliving your money. So when you buy a QLAC, which is issued by a life insurance company that issues annuities, you're transferring the risk to pay as long as you're breathing, even if you're on a ventilator. I call them ventilator annuities. So people always say, what's the ROI stand on a QLAC? I don't know that until you die. But I think one of the things that popped out in your article, which dovetailed into a prediction I made in 2015, I'm way ahead of my time, Steve. I'm a visionary. I said back then when QLACs were introduced, I said, this will eventually be the number one selling annuity type in the country. Now, I've missed that a little bit, but I still think I'm right. And you've dovetailed that when you said it eventually be a standard technique similar to, kind of the popularity of Roth IRAs. Can you explain where you're coming from on that?
Yeah, because I've been around long enough that I saw Roths when they first came out.
Yeah,
And you remember this, Dan. I mean, people laughed at it. It came out 27
sure.
years ago. And I remember a LinkedIn post where I was talking about Roths, and somebody wrote, "What do you mean, pay tax now when you don't have to? That's crazy talk." Well, nowadays, I mean, Roths are very popular. You're
Sure.
paying tax on the seed and not paying tax on the harvest. That makes sense. Well, I really believe that even though you have a weird name like QLACs, the same thing's going to catch on. People want a lifetime income. They can buy that income on the cheap at a discount with a QLAC. So eventually, as all the naysayers and everything finally figured out, I think that'll become very commonplace, just like Roths do, like Roths are.
Being the marketer that I am and the brander, every time I see an Aflac commercial with the duck, I'm introducing QLAC inside of that.
Yeah.
So, because similarly, it's a branding thing. People don't know anything about it. I think to me, and probably the number one seller of QLACs on the planet have been since day one because I believe in it, and we actually inform our clients about it through a myriad of thousands of videos and books. I think QLACs are more of an emotional purchase. Yes, annuities are math, and we only sell contractual guarantees. But the reason I say that is you can attach your spouse for lifetime income using your IRA assets. And in a world where, last stat I saw, private companies, there's 9% or less that offer pensions. 401ks, 403bs, 457s are accumulation products, but at some point in time, you're going to have to convert part of your IRA or those type of assets, qualified assets, into lifetime income, which is where these things come in. Now, the peace of mind part in your article, I appreciate, and I guess that kind of correlates with what I just talked about, the emotional decision of lifetime income. Talk to me a little bit about what you call the older me version.
Yeah, and a few years ago I couldn't spell septuagenarian, and now I am one in the 70s. And I see this with my friends and neighbors and relatives is at some point in your life you start appreciating the peace of mind that comes with having some kind of guaranteed income because you're not making a paycheck, and if your investments go wrong, you can't go back to work. So let me give you the example that I use in my article is, you've recently retired and you go to the doctor and you get the news, Jim, there's now a safe surgical procedure for that terminal medical condition you have. So all things considered, you got a long life to live. Well, it sounds great, but maybe that's unwelcome news in the weird sense that prognosis about your medical condition means that you're going to have a longer lifespan and you didn't plan for it. And so suddenly you're going, well, how am I going to pay for that? So that's what I'm getting at is there's that peace of mind idea that I really need to feel like I'm going to have an income no matter what. So the idea with the QLAC, where I was going at is, what if I told you you could cover that increased life expectancy that you're going to have by have it pay an income stream to you? So if I could just give a quick example, and you've got all the numbers and the
Sure.
calculators for it, but let's say that Jim was age 60 and he took a couple $100,000 from his 401k or his IRA and bought one of these things, so a couple 100,000. And now he wants it to start paying him at 80, so that's 20 years.
Mm-hmm.
But he wants to get his money back because, it's a cash refund feature just in case. Well, that would still lock in $6,200 a month or somewhere around that, beginning at age 80 or $74,000 a year. That's pretty cheap insurance, especially knowing that maybe there's going to be even another medical technology that's going to make him live even longer.
And once again, you can attach a spouse. I really believe that's the magic right here. My wife has put up with me for all these years. We do everything joint lifetime income. Yes, you're going to get a smaller payout because it's two lives, but I just think it's really unique that you can do that. Let me interject a couple things because people are going to reflex and say, well, I'd never buy an annuity because the annuity company keeps the money when I die. Well, with QLACs, as Steve just pointed out, you can structure what's called life or joint life with cash refund. What does that mean? That means when your Learjet hits the mountain, whatever money is left in the account goes 100% to the list of beneficiaries, and the evil annuity company doesn't keep a penny, even though they are contractually on the hook to pay for as long as you are breathing. Okay, so dispel that thing that you've read. Well, annuity company keeps the money. Don't be dumb at the cocktail party because it doesn't work like that. The other thing too is, and I've read some. I'm not going to mention their names because I know them and they're great people, but they manage money for a fee nationally, and they'll say things like, well, if you compare investments to a QLAC, investments, historically beat QLAC returns. That could be the dumbest thing I've ever heard. Dumb as a box of hair, as they say in the South, because you're comparing an investment to a contract. A QLAC, qualified longevity annuity contract, is a transfer of risk contract. QLACs don't have any moving parts, any annual fees, no market attachments. So yes, there's some opportunity loss, but used in proportion with your portfolio and part of your overall plan in the plan of the income floor, QLACs are, in my opinion, a bargain when you're looking for future lifetime income. Expound on that. What did I miss? And I was on
Well,
this. I was on the soapbox. I'm stepping back off.
well, I get on the same soapbox. The one thing that I think that people don't get when they start playing this game of trying to compare apples to oranges with investment return is at least I don't know when you're going to die. Maybe you do. So, in other words, you say, okay, I'm going to plan for, I need to have income. I don't want to run out of money before I run out of oxygen. So, what age am I going to use? Well, you really can't take your life expectancy. Let's say it's 84, because that just means half the people died before 84.
Correct.
So you got to maybe plan it for 95 because again, you don't want to eat cat food and live in your car. So that's what you have to do as an investor. What's the insurance company have to do? They don't have to do that because they're going to have a QLAC with you and me and all these others and
Mm-hmm.
hundreds of thousands of people. And so they base it on average life expectancy. And so, yeah, if you die prematurely, and by the way, who dies maturely? I've always wondered about, but
That is. Well, I hope I will see. That means I'm thinking correctly.
yeah. Yeah, I mean, granted, if you die earlier, you get less, though, as you pointed out, you can have a
Mm-hmm.
refund feature. If you live longer, you've had Dr. Wade Pfau, he calls it the mortality premium.
Sure.
You get the advantage of the people that died before you. I want to bet for you, not against you. And so that's the point. You can't just take a apples to apples look on return. And if I can give you one quick example that
Sure.
the audience might just see where I'm going with this. You sell SPIAs, right? Single premium immediate annuities.
Absolutely.
Well, Jim, if he said, "Well, I don't know, I don't think I'm going to do this. I'm going to wait until I'm 80, and then I'll buy an annuity stream." That's fine. I know, Stan, that you'll help him on that.
Sure.
But now to generate that same amount of income I was talking about, $6,200 a month. Well, now it's not 200,000 that's going to do it. It's about $780,000
Mm-hmm.
because he waited 20 years. So if you want to play the numbers game over 20 years, he'd have to make at least 7% on his money to get to the same place. I don't know about you, but for peace of mind, I can put some money away. And in fact, by the way, have put money away in a QLAC with you, by the way. That's a free
Sure.
advertisement. Um, why not? I didn't take it all, but I took some to lock in that income.
And that's at that income floor. Tommy Hegna is a good friend of ours. He calls it mortality credits. And just think about going to your favorite football stadium, and everybody in that football stadium is your age and your gender. And what you're in essence doing is you're sharing and pooling the risk with all of those people. Some are going to live longer than their life expectancy. Some are going to live shorter. Some are going to die right on the money, right on where the actuary will say they're going to die. And you're pooling that risk to get a better price. The other thing I want to point out is Qualified longevity annuity contracts are the same structure as a single premium immediate annuity. It's a transfer of risk. The income coming back to you is a combination of return of principal plus interest, but because it's IRA qualified type assets, you're going to have to pay taxes on that money coming out of an IRA like any structure. But there's three types of products that are pretty much the same. SPIAs, single premium immediate annuities, deferred income annuities, which is a SPIA that you defer past 1 year. And then there's qualified longevity annuity contracts, which is a DIA that's used in a qualified account. I know I just acronymed everyone to death, but the point is these are very simplistic pro-consumer products, and the big boys, the big carriers, the ones that everyone loves, the A double plus carriers, they're the ones that play here, okay? They're the ones that you're going to feel very, very comfortable with. People will say, well, Stan, what happens if a double A plus company goes out of business? My answers were screwed. You know, the country's in trouble, okay? we got bigger issues, to say the least. One of the things you point out in your article as well was that you just can't assume that all annuity carriers are fine, which is what I kind of talked about, the strength. And I always tell people, if you're buying lifetime income, A plus or better, and of course I rhyme everything, A plus or better, and you don't need a sweater. A plus or better with a QLAC, that's, or any lifetime income product, in my opinion, and with my team, and my main office is based in Las Vegas, Nevada, which you've got to laugh at because that's a risk place and we sell no risk. How are some of these carriers using what you call unusual assets?
Yeah, that's a good one to be aware of, and that's why people like you are around to screen this. But
Mm-hmm.
we're seeing some things where hedge funds are coming in or private equity are coming in and buying some of these smaller insurance companies, and they're using, I call it unusual assets. It's kind of like these synthetic securities. So we remember this happening back in the Great Recession, where they were buying a bunch of mortgages, putting it into pool and calling it kind of a bond. What in the bond? It's a synthetic security. Well, we're starting to pick up on some of these companies doing it, and without getting all techie and all that, sometimes they're taking some of these investments offshore with reinsurance arrangements. No, there's not going to be a quiz in this when we're done. But all I mean is some of these more questionable companies have been messing around with the assets, and we've always associated insurance companies with security, bonds,
Sure.
that kind of thing. So that all I'm saying is you need to have somebody screening, because it's not like all the companies are doing it. I'm just saying some are. And so it's not a real good thing to DIY yourself unless you know everything about
Yeah.
synthetic securities and offshore reinsurance.
Yeah. Our site is do it yourself until you get to the finish line. And then
Correct.
we answer the questions, explain the good, the bad, the upside, and the downside. To cover your point here on these questionable companies, they are not in the QLAC game. And the reason they're not, and they're typically not in the immediate annuity game or deferred annuity game either, because of the capital requirement to play, which means that you got to be big, big, big. These companies typically are in, nothing against index annuities, but they're in the index annuity space. They're not in the QLAC space. Now, will that change? It might. But once again, A plus or better, when you run quotes at my site at theannuityman.com for QLACs, you're going to see those names you're comfortable with. We're not going to give them any advertisements because they don't need it. But all the ones that make you feel warm and fuzzy and run all the ads and have the big buildings and the big planes, they have the financial wherewithal to back the claims that they're putting out. So right now, the filter is already in place. Will that change in the future? If it does, we talk about that as my staff and my management team all the time, and we're always filtering and looking under the hood because I do have a little bit of a street background with Morgan Stanley, Dean Witter, Payne Weber, and UBS, so I can read, when it doesn't look right. But one thing I wanted to also point out, people always say, well, Stan, this sounds great. This sounds too good to be true. Understand with any annuity type, it's never too good to be true. Let's talk about the downside of QLACs, okay? The downside of a QLAC is liquidity or lack thereof. You're locked, and just think of it if you're a Southerner or from Texas and you're going hunting, you're locking and loading, baby. Lock and load, you're locking and loading your lifetime income. You can structure it once again so that the evil annuity company never keeps money, even though they're on the hook to pay as long as you're breathing. But the downside would be liquidity. You can't call us up 5 years from now and say, you know what? I don't want to do that anymore. I want to go buy a boat. Send me that QLAC money. You can't. Okay. You're going to get all of your payments back, as long as you live. And if you die in a fiery Learjet crash, structuring it with cash refund, the remaining money will go to your beneficiaries. But if you said, what's the downside? To me, that's the downside. The upside, no annual fees, no moving parts, no market attachments, transfer risk, and their pay as long as you are breathing. So, remember, annuities are the only product category that pays a lifetime income, so that, you can't really calculate ROI until, like Steve said, if when you're going to die. By the way, we're talking with Steve Parrish, a young 48-year veteran who works with the American College. If you haven't been there, it's americancollege.edu. Excuse me, theamericancollege.edu. Check it out. It's really cool. It's the American College of Financial Services. They do a great job in this space, educating everybody, primarily agents and advisors, because they need it.
Yeah.
Both.
Hey, Stan, can I throw in one other? Because I was just
Throw it.
thinking about the downside is liquidity. When somebody says, hey, I want to buy a boat, but let me flip that on you, is the government's forcing you in a way to have liquidity. It's those required minimum distributions. So
Yes.
in a year, whether I want to or not, the government says I have to take some of my money out. Well, we really haven't mentioned this, and when QLACs first came out, that was the big deal,
Yeah.
is you don't have to. In other words, if you have a QLAC, you don't have to at 73 start taking that money out. So my counter to the liquidity thing is, yeah, but if the government's going to make you take the money, they can't make you take it if you have it in a QLAC.
Yeah, and one of the things that, I don't get a lot of Christmas cards from the industry. I know that's hard for you to believe, Steve, but one of the things I always tell people is you need to look at that required minimum distribution as what I call a forced annuity. It's
Yeah.
the IRS tapping you on the shoulder and go, oh, by the way, regardless of whether you need the money or not, you have to take a payment every year. To me, that's an annuity. You can call it what you want to. Now, all the masters of the universe go crazy when I say that, but send the email, stan@theannuityman.com, and I'll respond. But the point is, it's all about lifetime income. It's all about your income floor in chapter 2 of your life. I don't call it retirement. I call it chapter 2. You need that income coming in that's guaranteed, that's not volatile. And our friend Wade Pfau, that's Pfau, if you want to pull him up, buy his books, or you can go to Fun with Annuities and watch the podcast we did. He has factually destroyed the 4% rule, which is don't buy an annuity, just take 4% from your portfolio. That's garbage, as they say in French. And I think people are warming up to the fact that an annuity for lifetime income might make sense to either provide a significant part of your lifetime income needs, or fill a gap from Social Security, a pension if you're so fortunate, dividend, stocks, rental income, whatever's coming in, so that you don't have to think about it and you have that lifetime income that you need.
Absolutely.
Let's talk about interest rates. One of the things that we get asked all the time, and let me just clarify right here. If I knew where interest rates were going, I wouldn't be talking to anyone. I'd be on my Learjet trading interest rate futures, but I don't, and none of us do. I'm going to ask you this question, but let me answer mine. The popularity of annuities, will they increase or decrease with interest rates volatile, moving up and down? Just based on the Annuity Man numbers, which I will not give because we're a private company, which I own everything, they have not been affected either way, because people need contractual guarantees. People need principal protection, income for life, legacy, and long-term care solutions. That's a PIL acronym I came up with. So I do not think that interest rates will play a significant role in either the growth. I think the growth is going to come from the 13 to 15,000 people hitting 65 every single day. And remember, everyone, the primary pricing mechanism of a QLAC, a SPIA, a DIA, an income rider, whatever lifetime income product you're looking at, is your life expectancy. Okay, not interest rates. Interest rates play a secondary role. But what is your comment to that?
Well, they always teach you never to answer a question with yes or no, but I'm still going to give a no. No, I don't think interest rates, I mean, assuming interest rates going down, who
Sure.
knows, that's really going to have any effect on the popularity. And what I'm thinking, Stan, is first of all, they're more mainstream. I mean, annuities in general. So yeah, there's the people that say, I hate them or whatever, but we're not hearing as much. And I think the other thing to keep in mind
Wait, let
is,
me interject. Hold that. To the annuity industry, I say you're welcome. Go ahead.
yeah. That's a good point from your standpoint. Well, I think another thing is the government has, I'm going to use the word blessed annuities in the Secure Act. When
Hmm.
the Secure Act and Secure 2.0 came out, which was bipartisan law that, once Congress actually agreed on something, they knew we had to take care of people's incomes when they're elderly. Well, essentially, they blessed annuities with all these provisions that were positive. So
Hmm.
that's going to be there. And then there's just all the product innovation, and these companies aren't dumb. They're coming up with great things that address consumer needs. So to the question, will they go down in popularity? Is it all an interest rate play? I clearly think the answer is no. It's the need, not the where interest rates are at any one point in time.
I think it's important to point out that there's not one perfect QLAC carrier. There's not, people say, what's the best QLAC carrier? There is none. When you're shopping annuities for contractual guarantees only, which is a QLAC, then you've commoditized the product. Now, obviously, A plus or better, you don't need a sweater, okay? But when you quote all carriers, and if you go to my site at the Annuity Man and use our calculators, you're going to quote all carriers. Um, these quotes change like a gallon of milk, okay? They're commodity products, and the reason they change is because of capacity issues, okay? Carriers, life insurance companies that issue annuities, they have a specific number that they want to hit for specific age ranges. Think about when you're a master of the universe stock guy or gal says, okay, we're going to do international small cap, value, mid cap, large cap, whatever. They have a specific percentage. They're filling tranches. The same thing happens at life insurance companies when they issue annuities like a QLAC. They have tranches of age ranges. Once they fill that up, they're going to lower the guarantee not to attract you. If they don't have enough people in your age group, they're going to raise the guarantee to attract you. So you can't quote something today and then a month from now go, you know what? I want that XYZ QLAC, Stan. I do that Southern accent because I'm from North Carolina. I can get away with that. And no, because they're commodity products. Yes, you can lock them in and lock that quote in if you want to move forward, but it's something that you have to understand. When you quote it, it's like a gallon of milk. Just put it in the back of your head. It could be there, it could not be there, but the point is, the good news is these are commodity products, and there's not one carrier that's better than the rest. One of the things I want to really talk to you about is the workplace starting to offer the QLAC within their choices of quote unquote investments. What's your thought on that?
Well, let's set the baseline that basically the Secure Act made it easier for employers to do that, or we
Mm-hmm.
wouldn't see it.
Right.
But now they can do that. And Stan, this is me speculating. I don't know whether it'll be a big place that you buy them or not. I mean, it'd be a great deal if you're in your 401k and you take some of your money and buy a QLAC. The reason I'm asking that is it's amazed me over the years, and again, 48 years, that really take life insurance, the flip side of annuities. People don't tend to buy a lot of life insurance through their employers, even though they can get, the advantage of big buying from a big company.
Right.
So I don't know. I'm really curious whether that'll happen or whether people will say, look, I want to control this. I'll do it with my own IRA money. What do you think? Because I'm just not sure whether that'll take off inside the employer or not.
Well, obviously, I have a contrarian view on this because I am a contrarian, but I look at it from the standpoint of the annuity man's big company. We have a board of directors, okay, and that board of directors has a they have fiduciary responsibility to do the right thing.
Yeah.
Okay, so when these companies are offering 401ks or 43, whatever it is, 457, 43Bs, which is government, but let's just say 401ks, they have a fiduciary responsibility to do what's right for the employees. Now, dovetailing from there, my question is, education to the employees, them understanding the liquidity issues, the choices, the commoditization. And then my biggest worry is, let's just say that the board of directors of XYZ big mega corporation says, we're going to offer QLACs. And then the big boy life insurance companies, let's just say there's one or two or three, come in and pay a shelf space fee to get on that platform to sell the QLACs. Well, to me, that messes up the whole thing because, like I said before, these quotes are like a gallon of milk, and you need to quote all carriers to get the highest contractual guarantee for your specific situation. So my concern is the as they say in the South, the good old boy network letting in the a few gargantuan can pay the freight companies to offer QLACs, and then the pricing isn't competitive when you said, okay, here's my QLAC quote from XYZ Corporation, and I'm going to go to that crazy dude at Stan at theannuityman.com. I'm going to quote it there. I'm probably going to tell you that we're going to beat that quote. Why? Because we're quoting all carriers, and you only have a limited choice. So my concern at the workplace is that it's a limited choice and the education is not there. My whole thing with my company is edutainment. We make it fun and we educate you at the same time without pitching you. We're not hammers looking for nails. And I think there's a huge education leap with QLACs, even though they're simplistic products, that people need to understand before jumping in. That's my opinion. That's the reason I don't think they're going to catch on like has been predicted by some.
Yeah, and again, we've seen that on the insurance side. People don't really want to buy it through their employer because you get a choice of one. How good is that?
It's not good. And as a board, if I'm a board member, any board members listening to this, and someone's pushing to QLAC and they have one or two choices, you need to avoid that decision, because you can have someone that's a participant say, I should have had more choices, right? Okay. I understand the law of all of that, but to me, it's just basic. You have to provide choices to the employees. Let's pivot to Social Security. Are you worried about that, Steve?
I'm not personally worried about it. This is the game where they keep kicking the can down the road, but Congress almost has to act on Social Security. That said, people are worried about it.
Yeah, I think the best thing the government could do, and they're trying to do it now, but as government, they don't do it well. They need to educate people that Social Security should not be your primary retirement income source. Now, I understand the demographics, I understand the numbers, I understand the voters, I understand median and mean income levels and all that stuff. I get it. But I think that sooner that they start educating the public that this was never put in place for a primary source of income, obviously then it'll be bullied by either party that's them hating on voters and the working people. I've never understood, Steve, the working American. I thought we all worked. I didn't understand there's some that do and some that don't. But I think Social Security, it's never going to go away. It's never going to go insolvent. I don't care what the conspiracy theorists think. That's my opinion. But should you put things in place for, say, your children or your loved ones to not depend on it? If you have that ability, definitely. That's what QLACs are for. But as you said pretty well, you need to supplement it with your own quote unquote income that you can't outlive, and that would be an annuity. That's not some homer, pound the table buy for me. That's just reality. Annuities are the only product type and category that provide a lifetime income stream. There's different types of annuities, but there's 4 types that do that. What are your thoughts?
Well, and yeah, I mean, to be clear, I'm not worried that the Social Security that you've put money into now is just going to dissipate. It's not going to do that.
No.
But does anybody think Social Security is going to go up? Are you kidding? The issue right now is to maintain it. When a politician says, well, I'm not going to touch Social Security, What they're really saying is your Social Security will go down because if they don't touch it, then what happens is in 10 years, they're going to have to start lowering the benefits. So what I'm thinking is they'll take care of that. But all that means is maybe they're going to have to do something. They're going to make a later retirement age, or maybe the consumer price index they use to measure your cost of living is going to go down. So supplementing your Social Security makes sense because it's a wonderful thing to have, but I don't see it going up. I just mean I think it'll be there, but that's just base. I mean, you need more than that. It's an annuity. So your responsibility is to get a supplemental annuity with your own money
Sure.
so that you're going to be happy in retirement.
No, absolutely. And the reason that QLACs are important, in my opinion, and yours as well, is that the vast majority of assets in this country are IRA type qualified assets. I mean, the government's been trying to figure out how to get to those for a long, long time.
Yeah.
But QLACs represent, using your IRA assets for lifetime income, which I think is a very good thing. Once again, you can set it up on you. You can set it up on you and your spouse. Each one of you can have one. The rules change all the time. We're not going to go over the rules today because we don't want to date this because it'll change. And it'll be on my site at theannuityman.com if you want to check it out. But there are rules for how much you can put in. They do limit that, but it's a pretty high limit. When it first started out in 2014, it was low with a bunch of rules. They got rid of all that nonsense governmental speak and made it very easy to understand. So, in my opinion, going back to the original comment you made that, QLACs will eventually be the standard technique used for retirement income, similar to the popularity growth of Roth IRAs. I think that's very prophetic. I've not yet heard anybody say that, so you get full credit from here on in. But I do think, I think that's a good comment. I think that the Roth IRA had needed education to get people to understand the good, the bad, the benefits, the limitations. Same thing with QLACs.
Yeah, it's just going to take a little bit of time, but you know, talk to some of the professors. I have a QLAC. You were
Mm-hmm.
talking to Wade and to
Sure,
Michael and some of these other people.
sure.
We see it coming.
No, it is coming. So, let's close this thing up as I do with a lot of my guests when I feel froggy, is I ask them to do a mic drop moment, which means that all the pressure's on you. I'm going to count you down from 5, and you're going to say something so unbelievable, Steve, that it's going to even astound you, and it's just going to make the listener drop and say, "Oh my gosh!" So you ready? I know you're prepared. You ready?
Well,
5, 4, 3, 2, 1, go.
I'm going to repeat something I said at the beginning, but maybe it'll make sense to you, is that the older you is not going to be the same as the younger you. Take my word for it. Someday you're going to get older. You want to have peace of mind. You're not going to want to have to call your broker every month when the economy is going crazy. You want to play with your grandkids, go golfing, whatever. And to know that you've locked in some income, you're just going to have to take my word on it. See, I don't have much hair left, is the fact that you're going to be real happy when you don't have to mess with this stuff older, and you know that you just got an income. As Forrest Gump says, it's one less thing.
There you go. And that's from a very smart dude with 48 years of experience. His name is Steve Parrish. He is a good friend and he is a very smart person. I'm so glad that you joined us. I'm glad everyone else joined us on Fun with Annuities, the #1 annuity podcast on the planet, hosted by yours truly, Stan, the Annuity Man, America's annuity agent. We will see you next time.